During the bear market, we see the price of Bitcoin fall drastically, and that's exactly what's happened. Since November of last year, the price has fallen by 70%. This puts immense pressure on the Bitcoin miners, especially the publicly traded ones. Before we talk about the current situation, let's take a step back and remember that last year was a banner year for many of these publicly traded miners. They used debt and other types of financing to fuel impressive growth. But now as Bitcoin's price has fallen, we have seen the hash rate continue to explode upwards, which means price is down. That's the financial reward. But competition is up. That's the hash rate. And so naturally, as we watch these people and these companies under immense pressure, they're having to make hard decisions. If we use Core Scientific, which Dylan LeClaire from Bitcoin Magazine so eloquently pointed out, they are the quintessential example at the moment. In a filing with the SEC earlier this week, they stated the following. As a result, management has been actively taking steps to decrease monthly costs, delay construction expenses, reduce and delay capital expenditures, and increase hosting revenues. In addition, the board has decided that the company will not make payments coming due in late October and early November 2022 with respect to several of its equipment and other financings. Now, the reason why this is a big deal is because Core Scientific is obviously under pressure. Their stock price is down a lot, and the price of Bitcoin is not helping. But they also had more than 1,000 Bitcoin that was sitting on their balance sheet. Later in that same filing, they stated that they've actually sold most of that Bitcoin. In the filing, they say, as of October 26th, the company only holds 24 Bitcoin and approximately $26 million in cash. That compares to over 1,000 Bitcoin and approximately $29 million in cash as of September 30th of this year. These Bitcoin miners are facing incredible pressure, and many of them are fighting for their life right now. The reason why Core Scientific is such a great example is that they're the largest publicly traded miner by hash rate. And so even the big guys, they're in trouble as well. Now, there will be plenty of people dunking on Core Scientific over the coming weeks and months. I don't think that that's fair. The reality is that building businesses is tough. And in bear markets, that becomes more complex and much harder. Ultimately, these teams are going to have to decide. Can they get financing in the debt and equity markets, or will they have to pursue some sort of other strategy? It's rough out there right now, and the publicly traded miners are not safe. We are watching in real time the pain of a bear market, and ultimately, I'm hoping, as should you, that these companies all come out on the other side healthier, stronger, and ready to thrive in the next bull market.